Hello, everyone, and welcome to Losers Become Winners Special Report. Living expense free by trading where you spend money. This is one of my psychological things, and here how it works. We spend money, and all the money we're spending out there is going to somebody, some company, some corporation, some stock, and we're going to come to a thing called ETFs. Now, these are the categories of living expenses from Google search. Of course, rent, mortgage in the top. I was surprised about Social Security, pension, and 401k, and you can probably lump taxes in there too. And going back and reflecting, true, if you max out your contributions in their pensions and your 401ks, then you end up with a nice deduction on your taxes now and then pay for it later at retirement. So when we have withdrawals, utilities, internet, phone, in here included, people sometimes miss this, is gasoline. Yes, gasoline is a utility. It runs the car. Food, of course, and depending on your household, this can be above average. Ours is slightly above average in our household because I have a 5-star chef's wife, and she likes making very pretty but very rich, very good food. Not rich in sauce, calories, and stuff like that, but very good. She shops twice a week. Let me put it that way. Chefs don't like anything older than 3 days in the refrigerator. Transportation. Yeah, anything in transportation. Take a plane, take a car, take a train, take a bus, take a scooter, take whatever, anything with wheels, that's transportation. And also all the services that are included with it. Entertainment, go to a show, go to a movie, apparel, any kind of shopping. Of healthcare, I was surprised healthcare was this low. I expected it to be higher. This is in order of priorities. Charities, outbeat education. And then I added the category money. Why? Because we can trade money. Yes, you can trade dollar, gold, and silver, which is in turn a currency. Now, ETFs. An ETF is a collection of stocks created by an investment house. So you have an investment house called Invesco, and they create their ETFs. Then you have BlackRock, they create their own. And then you have State Street, they have theirs. Then you have Vanguard. So all these companies, there's about 1,000 ETFs, but we only trade the top 20, maybe a little more. But the bottom line is that we stick with the ones where the money really is at. The small niche ones that for people. Now, what's the purpose of this? The purpose is that you're trading to make income to pay for your expenses that I have listed above, therefore freeing up the income to build wealth. So you end up having FIRE, financial independence, retire early. Now, I know there's a lot of controversy on this, but I'm going to tell you, I come from old school. I was born in the first part of the latter century. So that gives you a clue. But the bottom line is, we were taught to finish high school at 18, go to college, go to the military, go to work. 3 choices, done. Then if you went to college, you went to work at 22. If you went for a master's, was unheard of in my time. And then you finished high school, didn't have any career choices, you went to the military. If you had a career choice, then you went off to the career. The idea was you work 45 and retire 65, and then your average lifespan in those days was 75. Now we're up to 85, but back in my time, it was 75. So you get 10 years for working for 45. Now you're getting 20 years for working 45. I am dead set against that. You're going to work 20 and enjoy 45. So you finish high school at 18, you loaf for a couple of years, you start to work at 20, become a trader, become a pro trader. I got Taiki, I've mentioned him before in our series. He's 13, he's doing paper trading, he can knock it out of the park. And yes, his account is in positive territory. Going from there, you trade, make an income. Now you have a consistent income. Now for wealth building, that's where you put your money into more long-term substantial assets, like let's say rental property, or you build enough wealth that you're able to then go into what they call private equity investments, which we have substantial returns. I know about private equities. I was a pension trustee for a pension fund for 7 years, and it was a large pension fund. It's considered to be in the majors. And I learned from these portfolio managers. So when we invest in a lot of things. So let's move on. So what's the object? How do we do this? That's going to be the real question. How do we do it? Well, how we do it is we come down here to our ETF. This is your ETFs that represent the categories. So you have rent and mortgage, and this represented by XLR is State Street, IYR is BlackRock, TLT I think was State Street, I don't remember, but it doesn't matter. An ETF trades just like a stock. Yeah, go to Google Finance and call it up. And then you'll see it right there, Google Finance. You type in these guys and you're going to get the ETF. Now the ETF is like a 401k, but it's different. It's like a mutual fund. It's different. It's different because it focuses on a niche sector. Mutual funds and 401k plans focus on a strategy or a manager who's supposed to be a great stock picker, or a private equity fund that offers opportunities to the pension funds to go out and invest money into toll bridges and toll roads. So you know what cash flow. But we retail traders don't have that opportunity, not until you build enough wealth to attract their attention, because some of these investments, minimum investment is 25,000, 100,000. That's small. Most PEs are $5 million plus. Yeah, you have $5 million, you can go into a private equity that will have maybe a track record of 25 or 30% return. And now you can live off that interest very well, or that earnings. Remember, Kevin O'Leary says, spend the interest, not the capital. So let's hop into this. So these guys here, if you go look at these guys here and look at their chart, you'll look for their entry to look for a trade, and you have your mortgage covered. Here, you got to have the money you put out for Social Security, pension, 401k is returned through. Now, XLF is the financials. TLT is 20-year bond. The XLY is discretionary income. In other words, this is your want. I want to buy this. I don't need it, but I want it. That's for this category. XLP is staples. That's food. That's stuff you do have to buy. XR is real estate. Real estate. Bonds, again, look, there's cross financials because interest rates, loans, and then these are your builders. This is your home builders. Now, when they say home builders, they don't just mean homes. They mean all these mega project apartment buildings. That's part of this group. Now, how this works is that the individual investment companies decide who fits into their category and who qualifies. And if you go, when you go to Google Finance, you're going to see the top companies. In fact, let's do that. Let's go quickly go look at Google Finance. So we'll call up my Chrome and we'll go here to not Google, Yahoo. It's Yahoo Finance. I'm sorry. There it is. Yahoo Finance. Go here. Go to Yahoo Finance. Come here, type in the ticker symbol. I'm going to type in the XLY. I want consumer discretionary selected sector. There it is. And then you go to the word called holdings. There are their top. Look, in this XLY discretionary spending, Amazon is 26% position. Then Home Depot, McDonald's, you guys know these guys. I mean, Starbucks. Now, I'm going to tell you something here also, too. On Starbucks, I made a pretty penny on Starbucks. So all my Starbucks, but back to this thing about expenses, all my Starbucks for probably the next year or two, because I don't go to Starbucks often, it's paid. Yeah. You shop at Target, paid. Now, TJ Maxx, they owe me. They're on my lost leaders list. But unfortunately, they're in the middle of the lost leaders list. I still have a few lost leaders before I get to them. If you're watching my daily videos, Losers Become Winners, you will see I'm going after my lost leaders, and we're slowly chipping away at that big rock, getting it down and winning my money back. That's the important point here is you really don't lose money in the market in the long term, providing you have a trading plan and you stick to it. That's the thing. The market's geared for the upside. 70% of the time, the market is geared to the upside. Yeah, we have our retractions and we have our pullbacks, but that happens. But if you're learning a good trade, if you have a good trading plan, you're out of the trade most of the time. Yeah, you're going to hit the once in a while, you're going to hit that little bump in the road where you're going to take a big hit, like it's happened to me. You guys seen some of the videos? Watch them. They're there. I'm not hiding it. So that's the point. So let's go pick up. Let's go now. If we go and drop in, let's say XLP. Who's in the XLP group? This is Staples. Staples means food, stuff you have to have. There's XLP, and the 10 top holdings are Procter & Gamble, Coca-Cola, Pepsi, Walmart. I forgot what this company does. There's Costco. Costco, oh my goodness. I did a killing in Costco in the last 3 years. Costco is still paying me to shop at their store. Yes. And I don't have anything in these. I think Kimberly Clark might owe me some money, but I only remember most times the top 5 that I'm getting into. When I get to it. I get 65 to go through, 63, 64, 63 lost leaders in the Alpha account, and there's only 20 in the Tigers. So you check out those videos, you'll see it. So here it is. Also here you can do the screeners. This gets a little bit more involved. Don't need it. Let's go back to our situation here. So moving down the line, utilities, XLEs is your energy, gas, electric, gasoline, XMO, Chevron, Mobil, it's in here. XLK is your technology section, and XLU is utilities. So these are those sectors. Foods, again. Now, why do I have discretionary in food? Because the reason is that sometimes people say, I want that pizza. You need it? No. I want. This is your wants right there. Your wants are right here. XLYP. I don't know why that's not aligning right, but that's okay. Transportation. All right. XI is industries, XLB is materials. You take the materials, you make the product that comes out of the factory as a car, a bus, a train, a plane, a scooter. That's the transportation. That's where it's covered right here. And a personal point, I'm up for a new car. I am going to have XLI and XLB are going to pay for that new car. In addition, let's go back to Chrome and let's go to XLI. So what's going to happen now, I'm going to show you what I'm going to do. I'm looking at about $25,000 for a new car, or not, it's something in that area. I'm not a big spender on cars. I like fancy cars, but I don't like owning them. So right there. So these guys here, what I'm going to do, here's the trading plan, the overall trading plan. I'm going to take XLI, and I'm going to take these 10 people right here. Okay, and there's also XLB. So we're going to put in 25. We're going to allocate $25,000 for a replacement vehicle. I'm looking toward getting a high-end used car, because I really would like to get into a hydrogen or an EV car in about 5 to 6 years. So I don't want to go buying a brand new car, because if I buy a brand new car, I'm going to keep it for a minimum 10. So that's the way I am. All right. So we have these guys. Then let's go up and drop in. What is XLB made of? XLB materials, which you need materials to build it. There's it. Okay, so what does that say? That says this. Okay, guys, here we go. We have 25,000. Let's take that and let's start over here. We got top 10 in each category. Some of them might overlap, but not often. You know, I don't see any overlaps. Plus the ETFs themselves, XLI and XLB. That's 22 trading opportunities. So I take 25,000 divided by 22, and each one is now going to be responsible for $1,100. I'm going to round it off. Each one is going to be responsible for $1,150. I'm going to go trade 22 positions at $11.50. Now, some people say, why don't you just trade one for the 25? Because you never know which one's hot, which one's cold. So if you have and remember, we're going to stick to the trading plan. There's nothing new here. It's just that instead of having loss leaders, I'm going to have what they call now an expenditures list. So in the expenditures list, I'm going to put in transportation. I'm going to put in $25,000 for a replacement car, and then I'm going to go list the 22 positions that you tend to see here in the 10 you saw previously, plus XLI and XLB for 22 trade opportunities to get back 1150. Can I make 1150 back on? Yeah, you guys seen it. You go back and look at those videos. There's been some real good winners back there that've been over 1150. Or you take two trade exits. That one pays off, let's say 600 here, and another one pays another 700 there. That's 1300. 1300 chipped away against the 25,000 works. So that's the whole idea about living expense free. So let's go ahead and get rid of these guys. And so entertainment for services, your Amazon here, XLC is your media companies, Disney, Warner Brothers. XLK is your tech companies, Cisco, Apple. XLY, again, you don't need entertainment. You want entertainment. You don't need entertainment. Now, gamers, you video gamers, you're spending hours and hours playing Fortnite and World of Warships and all these other things. And I looked into them because they're kind of interesting, and it is a new growing industry. But here's how I'm going to do it. I'm going to be looking at for stocks in this category. There's 3 here, plus 10 each of the top 10. There's 33 opportunities right here to cover your gaming expenses. So now you want to go buy a new laptop with a big monitor. You're going to spend maybe $2,000. Let the market pay for it. You're going to go buy in World of Warships. I hear they have a new battleship that's being in construction called the Puerto Rico. And the story is that it takes 900 play hours to get it for free. And that's if you accomplish everything they tell you to do. 900 hours? Excuse me. If you are playing 900 hours and you're getting a minimum wage of $15, you're putting out $13,500 of your money of your value time out. If you're like my past fellow stage people here in Los Angeles, the average low rate is $30 an hour. That's $27,000. And then when you go buy and then you still have to buy the upgrades to the ship. Another $200-300. Yeah. Trade here, earn the money, let the market pay for it. Get down to close, same thing. Now this is retail, and then want. Yeah, you could put XLP in here if you want, but retail will probably cover it just as well. It doesn't really matter. It depends on how your strategy is going to be. Healthcare, XLB and XLY. Why XLY? Because there are some people who have some real beautiful health coverage. I mean, it's like, what do you think? The millionaires are going to buy Blue Shield cheapy? No, they're going to buy top of the line. Charities, give away your money, go for it. Education, it's a staple and a want. You got to go to college if you want a career and all. You got to take extra courses to try to better yourself. It's a want. Now we come to money. Gold. This is GLD. This is the ETF for GLD gold. This is silver. This is dollars, and again, financials, because the financials are involved in money. You go and you trade these guys. And how you do it. So here's the way to do it. You have, for those who have budgets, you know your expenditures. You know that you spent X number. You spend. Let's start at the top. Let's say you spend here in Los Angeles to get you a 1-bedroom in downtown Los Angeles. It's very, very expensive. It's ridiculous. But in the suburbs, you can get a nice 1-2-bedroom apartment for about $2,000 a month. Now, back to our trusty calculator. So you want to make the money to pay the rent. Now I'm going to say, don't start there. Please start down here. Make your budget and say, well, okay, where am I spending the least amount of money at? And use that as a stepping stone. Don't go after the big enchilada. Not yet, but I'm going to show you something. If you got $2,000 rent and you got 1, 2, 3, 4, 5, 6 positions, and each 6 is 10 top holdings, that's 66. Divide that by 66. Each trade has to give you $30 to help cover your rent, or help cover the $2,000, even a mortgage, $2,000 mortgage. Yeah, that's the whole thing. You break it down in small little pieces, and it becomes much more obtainable. So that's the way. That's my philosophy on. And do I practice this? Yes, I do. There's an account. You guys are not privy to it because this is an open presentation. But to my members, they get to see 2 other accounts in play. One account only has 9 loss leaders, 9, and there are 2 loss leaders in play right now that are on the very, very edge of bases loaded, and are going to be off the list to take me down to 7 loss leaders. Now, what's going to happen is I'm going to have only 7 loss leaders to play with, and I got a whole bunch amount of money sitting there not doing anything. One of my biggest mantras: idle money makes no money. So what I'm saying will be is that I just told you I'm in for a new car. On my tracker list on my spreadsheet, I now have expenditures, and under expenditures, there's $25,000 allocation to a new car. And when money is freed from the lost leaders, let's say I go to the lost leaders list, I got 7, and nobody is an opportunity of entering a trade. You don't trade just because you have to. You trade because you have a set of rules. So if the rules say I don't have an entry, I don't have an entry. So what do? I go to my expenditure list and say, okay, in my expenditure list, who here is ready to put me into a trade so I can get my $11.50 from each participant in the transportation to pay for my car. And dab a little also here in the pension 401k with XLF, because if I finance it, I'm going to be paying a small amount of interest. Well, I'll have that interest paid off too. Cover that also. So that is the philosophy of, this. Living expense free, trade where you spend the money. And simple spreadsheet, just keep track of it. A simple budget. I've seen free budget spreadsheets out there. So download one of them, start keeping track of your expenditures, and then go to I want to hold this up a little longer, and then see which ETF it applies to. And say, okay, mortgage rent, X number of dollars per month. The correlating ETFs are XLRE, IYR, TLT, IBT, XHB, XLF. Boom. Now you got 6 good ETFs. And then if you really want to go deeper or break it down even smaller, you go and look at the top 10 holdings of each one of the ETFs over here at Google, right there. Oh, so let's do one more. Let's go look at XLF, the financials. Who are the top 10 financial holdings in the ETF called XLF financials? Warren Buffett, Berkshire Hathaway. Yeah, he's big in finance. JP Morgan, Bank of America, you got him right there. American Express. American Express just in the private account, for the members only, just paid back a pretty penny. Now they only owe me 50% of what they owed me. And it was a pretty number. It was up there. Goldman Sachs, you saw in the alpha account, it exited, and it's now a shift off to the winner circle. So you see, the point comes down that learn to trade expense free. And that's all I can really urge you on to, is to start working toward that to achieve this: financial independence, retire early, work 20, enjoy 45, or make enough money, work part-time, because you still want to keep busy doing active stuff, and enjoy the family. And if family is your main thing, then enjoy growing up, having the kids grow up, and show them how to make their own money to protect their own life. So one more time, I'm going to leave this up for about another 20 seconds, and we may look at the clock. Okay, and that's pretty much wraps it up. I'm sorry that this video was long, but I think it was very important to start installing in everybody's mind of finding their financial freedom, their financial independence. I'm really big on that. Okay, another 10 seconds. 5, 4, 3, 2, 1. Okay, guys, that's it for Losers Become Winners Special Report, living expense free by trading where you spend money. I thank you very much for watching, and be well, trade well, take care. Bye-bye.